We can start.
Good evening, good afternoon, good morning, depending with where you are listening from. My name is Chido, and today we're having a very interesting discussion. Actually, it's going to be in the form of a presentation, which is mainly centered on realizing the digital economy for Africa, lessons from China. So with me today is Miss Patricia Kirumira Natabi. I hope I didn't murder your
Yes,
name.
you did it so perfectly.
Oh, thank you. She is an expert in Sino-Africa relations, and today she will be making a presentation on how Africa can harness the potential from the digital economy, particularly drawing lessons from the Chinese perspective. So before we start, I'm going to hand over to you, Patricia, to introduce yourself briefly, then we can start.
Okay, thank you so much. My name is Patricia Chirumira Natavi. I'm Ugandan. I'm a Ugandan lawyer, and I stayed in China for about 4 years, and I studied my master's during that time in China at a university called Changtan University. And this university specializes in researching on China-Africa relations. So that's where my interest came from and my passion for doing research in this field. And there are very many aspects of facets about the China-Africa relation, which I've shared a number of times on this platform. So I'm happy to share one other aspect, which is the digital economy and what lessons we can draw from China, or what takeaways can we draw from China, and the opportunities that the booming digital economy presents in the China-Africa relation.
Interesting. Thank you so much, Patricia, for that detailed introduction. So I don't know if you guys remember, we have had several discussions in the webinar and also the podcast where we're trying to unpack the digital economy from an African perspective. And we've also tried to single out specific aspects of the digital economy in a number of webinars. We have spoken of e-trade, we have spoken of digital trade, we have spoken of the issue of data, we have spoken of electronic payments, mobile money payments, the digital currencies. But today we're going to be hearing from Patricia's perspective the whole aspect of digital economy and how Africa is performing, how Africa is doing in that respect, and what needs to be done, or what are the potentials within the continent that we can make use of, like she said, using the Chinese experience. So without wasting much time, I'm going to hand over to you, Patricia, so that you dive into your presentation. And before you start your presentation, I just wanted to put it out there that the presentation is going to be available on the website. There's actually going to be a short course or training that will be on Sino-Africa relations. So this is a build up to the training. And yeah, I would just hand over to you, Patricia, to get into the presentation.
All right, thank you. As you can see on the screen, the outline of what I'll be discussing, it's going to be a really quick run through. And as our moderator has talked about the course, it will be available on the website later on. So this content can be accessed later on. So it will be a quick run through the different sections. So we'll introduce briefly the digital economy, China's experience. We'll look at Africa's budding digital environment, and then we'll look at opportunities, and then we'll conclude, and there will be various things we'll discuss in there. So immediately we'll just look at the aspects like you talked about before, the digital trade, the e-trade, e-commerce, data, electronic payments, and digital currency. These are kind of like some of the building blocks of digital economy, and what a digital market really entails. And all of them present their own unique aspects. And to go into detail, maybe in the future we'll go into more and more detail on each of these aspects in the China Africa perspective. But today is just a brief overview of all of these small facets of the relationship in the digital economy. So of course we have the digital trade, which is cross-border transfer of goods and services through the internet, which some people kind of like differentiate from e-commerce, because digital trade kind of like refers to the entire process. Well, e-commerce kind of like is more specific about the use of platforms in particular, like your Amazon, your eBay, your iTunes, like specific platforms, use of platforms to buy or sell certain, to trade in goods and services online from, and then you buy them from a specific offsite, kind of like where, and then the goods are delivered physically through, you make a transaction online and then you have them either cross some kind of border or something like that. So then you have the data which is the like the fuel to the engine. And a lot of digital platforms strive and build their business models around a data-driven business model. So the more data you have, the more efficiently you can run your digital platform, and this has raised a number of like issues about barriers to trade, how there's monopoly, how there's over data, there's privacy issues, there's IP issues, there's all sorts of issues about data collecting, processing, storing, and use of data. And then we have electronic payments, and there are so many forms of electronic payments these days, and all sorts of services and companies and tech companies out there providing all forms of electronic payments. And then of course we have the new contender, the digital currency, the blockchain, your cryptocurrencies, and we're seeing these things gaining a lot of traction in recent years in Africa as well. So of course the digital economy plays such a very vital role in Africa's future development, and it has had a great presence before, but now it's picking up more and more. So we are seeing a lot of national economies digitalizing so that they can bring faster socioeconomic transformation, and we are seeing unprecedented developments driving global trade across different sectors, across different actors, and use not just in the sell, in e-commerce, in the sell and consumption of goods online, but also in applications in agriculture, in industrialization, the use of digital tools to make production become much faster, to add value to the supply chain, to deliver public goods through the government to areas, to make things run much more smoothly for governments and for citizens and for small to medium-sized enterprises. And then the use of digital tools like big data and AI technology has been really relevant for the global pandemic and improving responsiveness of governments, development of vaccines, and just generally allowing governments to track the movement of their citizens so that they can be able to respond to the threats of the pandemic and deliver the tools they need. So the internet and digital tools and big data has been very relevant in recent years. So we're seeing transformative growth and diversification, like I mentioned, in traditional industry sectors like agriculture, faster integration into the global and regional markets in cross-border trade. So we're seeing barriers being broken down through the use of digital means, businesses being run across borders, very distant, wide apart markets being brought closer just by over the internet, and all that needs to be handled is just logistics at the borders and through customs. But you can transact very easily these days, get a product from the US when you're in Uganda or in India, and all within a click of a button. So there's a breakdown of barriers, and there's opening up of possibilities of investment in different markets. So Africa will be seeing a lot of investment in its virgin markets because we are still a very young industry in the digital economy. So there's possibilities of investment here in Africa. So it plays such a major role in the future of investment in Africa, especially in the digital environment. And then there's opportunities for employment, especially for small to medium enterprises and vulnerable groups like women and the disabled, people who can work from home, where before you had to have a physical address, but now all you need to have is a computer or a device, a mobile device like a phone, and you can transact all sorts of businesses. You can employ yourself, you can connect with customers over long distances. All you need is the internet. And then there's a lot of platforms and enterprises and e-commerce products and companies that are innovating in Africa. And all this is building talent and opening up possibilities for skills development and for innovation, and to just push the boundaries and allow young entrepreneurs to innovate and to answer problems that their communities are facing with digital means. So we look at China's experience, which is the main point of today's presentation. So China is by all means leaps and bounds ahead in the digital economy, in the e-commerce and just innovation, especially in recent years. So its digital economy is valued at $5 trillion in 2019, which is 36.2% of its GDP. Its e-commerce is off the charts. It's literally it makes so much money from e-commerce. It's amazing. Like it's grown exponentially fast, and it has, of course, this is propelled by fast, affordable internet. And most of China is connected to the internet. It has about 1.7 billion people, and almost 1 billion of those people have access to the internet. And internet is so cheap and so accessible, and many of these people use mobile phones. Even in the rural areas, the advancement is outstanding. I studied, of course, in kind of like a rural area, because in China they have a system where most of their universities are kind of like in the rural areas, not in the city centers. So even out there in the rural areas, you will be astounded by what you will see, by how even the beggars on the street, when they are begging, beggars have like a basket where you put money. But in China, the beggars have phones and they have a code, and you can tap the code to give them money. So it's outstanding. Like it's really it just blows your mind how relevant the internet and mobile usage and e-commerce is to Chinese people, and how it's integrated into daily life. So of course, like I mentioned, digital payment systems are just they've grown, they've just integrated into the daily life of Chinese people, and they use them so smoothly. And while we are still in the third revolution of digital currencies, China has just leapfrogged into the fourth industrial revolution. It's just permanently there. While we still rely on card payments and money payments, China is using phones and digital currencies in everyday life. They have developed systems where digital wallets and payments with QR codes is normal everyday life, where companies like Alipay and WeChat Pay have replaced what is the traditional banking system, what the banking system does. And for them, it makes sense because the country is so large, and to have a bank access all the people, all its customers, is literally impossible to have it, stretched so far wide. So these companies have figured out that some people will not be able to access the financial system or even understand it properly. So in order to do that, they've simplified banking for small, medium entrepreneurs, enterprises, and for the poor people, the local people who cannot access banking services. So they make it so that you can all you need is your phone to make a payment. All you need is to just swipe a QR code and you've made a payment for things. You don't have to go to a bank. All you need is a phone and access to the internet. So it's just outstanding. And according to the UNCTDA, China and the US have almost 75% of all patents related to blockchain technologies, 50% global spending on Internet of Things, and more than 75% of the world market for cloud computing, and 70% of the market capitalization value of the world's 70 largest digital platforms, it's just mind-blowing. So definitely it's just they own most of the value in the global digital economy. And of course, to add on to this, they've even leapfrogged the digital currency hurdle that most governments are facing now, because with digital currencies are mostly independent of government regulation and bureaucracies. So it's kind of like most governments in the world are struggling with that, because digital currencies, cryptocurrencies, are kind of hard to regulate. But China is already figuring out a system of digital currency, central bank digital currency, where central banks can sell digital currencies to its customers. So they've already even approached that and trying. It's already a working system. So this success, of course, has been due to a wide range of things. A very advanced digital infrastructure development, regulation of e-commerce and data storage. It has very many laws, and most of these laws are actually very new. They came about in the last 5 to 6 years, which is a really quick advancement. And this has been in response to the quick developments in digitalization. And then they're also pushing for paperless trading, which is accepting electronic documents instead of paper documents, especially in trade administration. So businesses do not have to really file papers at a government, travel to a government building. And so you cut time, wastage of time. All you need is to click a button and you filed your necessary trading registration documents and all that. And the bank, of course, the government plays a central role, a major central role. So its policy banks specifically invest and finance and give loans to tech companies, startups, especially those that are making big leaps in advancing technologies that are relevant to their economic development. And it prioritizes digitalization in national development strategies so that with everything, with all the sectors, planning in all the sectors, digitalization is key to each and every one of them, be it militarization, be it agriculture, be it industrialization, be it foreign relations. All sectors are paired with digitalization. So it advances side by side. They are coexistent. And then, of course, application of the digital industry to add value to the economy, and then early integration of digitalization in the economy, even way before full integration into the global trade, when China had gotten dark and during the Mao Zedong era, digitalization and investment in science and technology was key, even when China was at its lowest economic stage. It blessed digitalization and the digital economy before even industrialization and urbanization. So as its economy grew, the people were already acclimatized using digital tools in their daily transactions. So, like I said, strong government backing, large internet usage. So this also helps in the generation of large data resources, and this can be capitalized, monetized, and turned into revenue, especially for tech companies. So, and also another important aspect is the innovative tech industry itself. And this tech industry is very responsive to the particular Chinese ecosystem, digital ecosystem. So earlier on, Alibaba and JD.com, which are some of the biggest e-commerce platforms, they built their wealth on responding to needs of small, medium enterprises. They did not start from large markets. They started from the bottom. So there you can understand your people. You can understand the environment you're working in. And this makes them much, much more competitive against the bigger fish, the foreign enterprises that are entering into the Chinese market, because they understand their customers' needs and they can respond to them because they have intimate knowledge of them and they've innovated around customer service. So despite the fact that in recent years, online consumption in China is slowing down, these platforms are taking their services to offline models where they engage with their suppliers, their consumers, and making use of their products, even offline, relevant as they are online. So it shows a growth in the use of online of e-commerce and digital tools. So internationally, China is lowering it or removing most of its tariff and non-tariff barriers to regional and international trade. So it's putting in place lesser custom restraints on the importation or trade in digital tools and digital equipment and e-commerce, and then also participating in international agreements, standard setting like the WTO, although in the past it has had some kind of like disagreements with the WTO, especially with its firewall, the famous firewall, and its digital protectionism. But in the long run, China has been doing this in order to protect its own market, its own SMEs and its own companies from competition from outside sources, and this has allowed its own people to grow and its own innovation and development in the digital e-commerce to flourish. So and innovatively, of course, in 2016, Alibaba's Jack Ma introduced the world trade, the electronic world trade platform, which is like a very innovative idea, which kind of like looks at breaking down barriers for global barriers for SMEs worldwide, where they can trade without having to go through the traditional, sources, government restrictions, and they can exchange goods across borders. And it's already up and running. They already have a platform on the internet, and he's trying the company is trying to reach more and more customers, and using this platform, it will kind of be like a very, very innovative idea if it does work out, if it's received well. And yeah, and other tools that can be looked at can be the one-stop e-commerce administration system, where the government makes sure that all e-commerce related transactions are administered through one particular portal, so you don't have to go through different stages for authorization or authentication or of documents and things. You just go through one system, and then making regulatory changes to the laws and policies transparent, and then also empowering and developing supporting infrastructure like logistics, because if you buy things online, you need to deliver them really, really fast. So building on your transportation systems is very key. So of course, China has made great leaps and bounds in its infrastructure, so much so that it's starting to export its infrastructure materials abroad, because it already has perfect infrastructure. Now it can export that industry now, for example, to Africa. So we look at Africa's digital economy, and it has had a very slow start, but it was already there, and more it's becoming promising for the future. The consumption in Africa, the demand is growing, the market is big, and there's so much potential here on the African continent, more so because there's room for growth. There's so much demand. It wasn't there before, and it's growing. So there's room for investment on the African continent. So it's growing more and more. And there are so many new enterprises, new homegrown platforms in Africa, in different countries. OLX in Kenya, Nigeria's Jumia, which has been there since I think 2012, and so many different kinds of platforms and uses of electronic payments to reach even the people in far-flung areas. And you can see that these sorts of electronic payments like M-Pesa, all sorts of these mobile money payment things have grown exponentially in Africa due to that demand and that need to just carry out trade without having the intermediary of a banking system, which has been very hard for the local people to access, to understand really. So they trust more being able to have the power to transact in their own hands instantly without having to go through the formal banking system. And then also Bitcoin and electronic currencies have also picked up exponentially on the African continent. And there have been very many e-hubs that are taking advantage of this. And why these currencies are picking up could be attributed to a number of reasons. But for me, more intimately, I know this because studying abroad, it's really hard to send money and to transact. It's so expensive. The fees are really, really high. So a lot of foreign students are turning to foreign currencies and trading in these foreign currencies, and it has much, much lower, fees and remittance expenses, and time is cut short. And in some countries, it has become almost mundane. In Zambia, in Zimbabwe, it's amazing how cryptocurrencies have taken over. So there is just a fast development in these kinds of technologies and these kinds of digital entrepreneurship. So of course we can look at some of the challenges there. There's of course imbalances in global digitalization of economies. So it has created a digital divide between the developed countries and Asia in particular, because the Asian market really consumes digital products and takes up the market in exports, in exporting digital products, while in Africa and Latin America, it's really low consumption and also low production, and this can also be attributed to low, skills development, and even with research and R&Ds, research and development, we don't really develop these kinds of technologies on our continent. We consume them, we import them rather than produce them. So this has impacted our capacity to be productive, produce our own and export and participate in the market. Of course, there's limited internet penetration, and because of limited internet use, we do not have as many data resources and data centers to exploit these data reserves in order to develop e-commerce and use of digital tools. And also we have poor digital infrastructure development, both in hardware and software, which leaves a lot of dependency on mobile service providers to access internet, which makes it much, much more expensive. And of course, there's irregularities in regulation and governance, in things like e-commerce, in things like cryptocurrencies, in use of internet in general. In a country like Uganda, during election periods, the government can just decide to suddenly shut down certain, internet service providers, which makes it so difficult to transact digitally. So those are a few of the challenges there. And we look at some of the opportunities and the role China is playing in Africa's digital transformation. China is already one of Africa's largest trading partners. So of course, China has established deep trading relations with Africa and African countries, and it's exploiting the large virgin market here in order to sell and develop its own enterprises and selling its products and taking advantage of the large market here that has not really been properly exploited to carry out to encourage its own entrepreneurs and innovators to innovate and enterprise. So it's kind of like it's an open game for them, especially for the young developers. They already face a lot of competition in China. So coming here to the African continent, it gives the younger ones a market to experiment in. And then this, of course, has brought in different actors from China, like Oppo, China Mobile, ZTE, and Huawei, who are major actors. And China is also transferring a lot of its manufacturing and industrialization to Africa. So it means that the digitalization moves with that, and it comes to the African continent. And this gives opportunity for knowledge and skills transfer. So there was research, of course, by a research team from the China Africa Research Institute, the John Hopkins Harvard China Africa Research Institute, about what was practice and why it was gaining a lot of traction in countries like Nigeria and Kenya. And this was all due to knowledge and skills transfer and having those training centers in almost all the African countries in which it has a presence. So in Africa, of course, there's growing integration, market integration from the AFCFTA, and this digital revolution has a place to play in that. And China is tapping into that by approaching the negotiators and trying to come up with a plan that includes China as a partner in this advancement, whether it's in the building of infrastructure, whether it's in offering investment, money, financing, whether it's in sharing information of access both in Chinese markets or in the African markets for its traders and African traders. So China is already there in the game. And then China's investment in digital infrastructure in Africa has grown really quickly. And of course, we have talked about on this platform the digital Silk Road. So China is constructing submarine cables to bring internet, free, cheaper internet onto the African continent. And some of its own companies are moving with this and already capitalizing it. In East Africa, in Kenya, for example, there are certain companies there that are already taking advantage of this submarine cable and selling digital products based on this. So also China is already collaborating with a lot of governments in developing digital currency centers and offering advice to government banks and central banks about the trading in digital currencies, like how the People's Bank of China already has certain digital currency centers already established in Africa and giving out skills and knowledge training at these digital centers. So we look at some of the ways African governments and Africa can take advantage of these new opportunities, these mind-blowing opportunities that can lead somewhere. But of course they need a lot of help and a lot of clever negotiation skills and planning on the African side in order to take full advantage of the opportunities. Primary of which is the government. The government is the enabler. It sets a policy, it constructs, it facilitates usage and also facilitates investment and also just investing in enterprise and pushing for skills development and governance and regulation of the use of these digital tools. So the government should be encouraging linkages into a variety of sectors, not just at the point where there's the finished product and it's being sold, but throughout the whole process, like in agriculture, in industrialization, and to add value and to give incentive for innovation, to encourage, to push these industries to innovate and to answer problems that can be only answered by digitalization. And then to capitalize on the existing digital ecosystems that are already here. They are already young entrepreneurs, African entrepreneurs who are doing a lot of amazing things, who have been here, who are now coming into to support them through finance, through protecting them from aggressive foreign competition.